Hello, this is John Piper with the weekend video clip, and it's Saturday the 20th of May. Starting with a chart of gold here, just on a matter of practicality, I want to make a few points about what I can and can't do. I can't give you any advice because I don't know your financial situation, so obviously it's impossible to advise somebody without knowing what you're advising them about. Nor can I even suggest you take a trade. What I can do is tell you what I think is going to happen, what I'm doing, and then if you choose to do something on that basis, that's up to you. Obviously, your risk, it's your cash, your risk, etc., etc. I just try and help where I can. Now, I'm heavily involved in gold and silver, coins, ETFs, stocks, spread betting, etc., etc., etc. Gold and silver. I've now branched out into other forms of currency, cryptocurrencies, Bitcoin, Dogecoin, which is now up 5 times, Stellar, gaming, pink, all sorts of weird and wonderful things. Now, it's my belief that these various assets, and just to make a point, I mean, gold is a solid substance. I mean, the Eastern mystics for thousands of years have said that mass is based on energy, and the Western scientists sort of caught up 100 years ago or so. That's a fairly brief summary of the way it went. Many could dispute that wording, I think. Anyway, the point I'm really making is that although gold looks solid, and is solid in fact, and cryptocurrencies are not solid and are just energy, they're actually very similar to each other, and ultimately the value of both has nothing to do with what they are and everything to do with our opinion of what they're worth. I mean, the only way of valuing gold or a Bitcoin is to look at the currently traded price. You look at the currently traded price, and that's what you can buy and sell at. Now, in the case of gold, you may take some reassurance the fact it does actually exist. People have been trading it for thousands of years, and there is a perceived value there. But then, of course, that value is very changeable, and Bitcoin may be the newcomer, new kid on the block, but the same thing applies. Its actual value is purely a matter of opinion. Anyway, my main point is that I want this to be as useful as possible. So if you are interested in any of these vehicles, and if you feel I'm not presenting the issues in a way that's of the most use to you, then please email me and let me know what I can do to actually make that more useful, so that you either get on board if you want to, or don't get on board if you don't want to. But I just want to make sure that what I'm doing is at its optimum. Right, with that said, let me have a look at this. Let's have a look at this chart. My view is this is wave 1 of a new bull market. This is wave 2, ABC2 wave. Very nice and clear. From this low, the count gets a little bit unclear. It could be a 1, 2, 1, 2, with a third wave now developing. This line is the 200-day moving average. You see it was repulsed the market there. It broke through there. We then retested back down again. Now we're right on it once again, so it's clearly an important level. What I'd like to see is I'd like to see it bounce up from here and take out 1300, which is a key level for gold. On the downside, if it breaks 1200, that would be of some concern at this point in time. So those are the key levels right now, 1200 and 1300. So we'll have a look at the short-term chart now. Right, so looking at this hourly chart, the 200-day moving average is around here. That's where it's bounced off. Wave count here, 1, 2, possibly 3, 4, and a 5 to there. There are alternative counts there. This looks like it's just a one-off, so maybe an ABC coming in, so we could well see one more test before this is over. Possibly the 200-hour moving average might have some relevance on that base. From a practical point of view, I'm looking to add to positions at whenever I see something that's good. I like to see price spikes. So a solid price spike around here would be good news. A break above there, I could use extreme stop. That would also be good news. And I'll be putting alerts to subscribers in the WhatsApp room, and for those who requested it, in SMS alerts. Alright, turning to silver, this is a daily chart again. 200-day moving average. See, it's very well documented. Resistance there, support there. Support, then broken here, now resistance and resistance. This is not such a positive chart as gold, quite obviously. I'd like to see the market above the 200-day moving average. I'd like to see some clearly impulsive action coming in. Clearly support around 16 is important. Again, if I see some decent buying spikes, I'll be looking to buy the market, but right now I'm staying away from silver, other than my existing ETFs, stocks, etc., etc. Right, now look at the DAX. This is the 15-minute chart. Saw a peak here, had 5 waves down there, a warning sign of more to come. We then had an ABC, quite a strong one, ended up with 3 solid spikes above 12.8, big round number. So I went short there and sent out alert to my subscribers via the WhatsApp room and the well, those request SMS alerts. I did actually miss a room by mistake, which was a bit silly of me, but that's all. Well, that happened. Now, as far as a count from here is concerned, I would say we have a 1 down to there. That can be split into 5. 1, 2, 3. Well, a little blip for 5, but that's 1, 2. Then a 5-part third wave. That's going to be 4 and a 5th. So that's all wave 3. Now this thing here I'm counting as wave 4. May have peaked, may not have peaked. As I said here, if you see 5 waves down, you expect more to come. If we now get a 5th wave down here, then it would suggest there's more to come. So that would be a very negative technical part of the jigsaw falling into place. I mentioned a few anecdotal issues recently. For example, there were some property investors in Canada who had to be subdued by the police. Now, when buyers get so over-enthusiastic that the police had to be called to subdue their buying passion, it's a sure sign that things are reaching an extreme. I mean, how much stronger can your psychology get than that you had to be restrained physically by the police because you're fighting over some condo or whatever it was that they wanted to buy? The markets are a maelstrom of human psychology, and it's that kind of extreme that I look for a sign that things are peaking. I had something similar with when I sold a car recently. I sadly didn't have to call the police to restrain buyers, but there's a lot more interest than I've ever experienced before in a car of the type. It was a Porsche 997 Turbo, and I was quite staggered actually by the level of interest calls are pouring in. It was actually quite disruptive, really. Anyway, so we have those anecdotal issues, and we have the markets, well, not yet confirming, but we did see this. That would be one confirmation. We had expiry yesterday, so that can precede fast action. So next week's going to be critical, especially Monday morning. I'll be watching that carefully. I'll be sending out alert to subscribers if I see something that's useful. Right, on that note, I'll call it today, and I'm back with a report on Tuesday morning for subscribers, maybe a special report tomorrow on Monday. Have a great weekend, thanks for listening, and bye for now.